timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Insane and hysterical, just some of the adjectives that are being used to describe the California, maybe the national, but especially the California residential real estate market. Pete Weitzner joined by Dr. Esmael Adibi to assess these 25-30% increases. It was 30%, 32%, I think, on single-family homes in the state. Orange County was low 20. San Francisco, on top of their high values, another 28%. They're back to where they were in 2006, but it's all right now. And then when you lump in the fact that we're getting an increase nationally in housing starts and locally, it's starting to create jobs. So driven by the biggest factor, boss, is the lack of supply, right?
Can we just talk about those percentages you said?
Right.
Those percentages I want to warn everybody, you have to be very careful. There are about 5-6 different measurement, or agencies that they measure home prices, depending on what they use, mix of the home.
So California Association of Realtors was single family resale.
Single family, but the median price of homes that were sold.
Right.
So if you sell a bunch of cheap homes one month versus another month more expensive, you would
like
get...
you say, when you adjust for the mix, they weren't quite as high.
We are not as quite as high.
20s probably.
Still, not even 12,
okay.
20. It would be about between 12, 13, 14%, which is significant. I mean, I'm not, but sometimes people read the 30% and say, gee, I bet you my home did not go up 30%. So that's what the point is. Having said this, though, let me go back to your preface that you started. It's a supply, supply, supply. What has happened? The demand. Let's see who are people who are in the marketplace. Some people are coming to the market because of the affordability, first-time buyers, so they have bought and they continue to buy. Second, we have some foreign purchasers. These are the people who particularly are interested in Orange County, San Diego, Bay Area, and other part of the country, such as Miami,
a lot
New York,
of these are the cash
Seattle.
buyers.
Cash buyers.
Because financing is still a little, certainly more stringent.
Exactly.
You got to at least put 10% down.
Exactly.
And in some cases, you can't get the appraisal to match.
Exactly.
So but if you're an all cash buyer, it don't matter.
All cash buyer and foreign buyers are generally that because they don't have a credit history. So we have first-time home buyers and real demand, people who are finding job and buying, foreign buyers and investors. Now the investors is what makes me a little nervous. There's nothing wrong with investors, by the way, don't take me wrong. It's good if you have the money and you want to buy 2 homes and rent it out, or 20 for that matter.
No, your concern when I go back 6-7 years is when all the investors were buying in Bakersfield.
And, exactly, and you would ask them their exit strategy, and everybody was saying, oh, I'm here for long haul.
Yeah, right.
And then as soon as prices got soft, they started selling. So, going back to what's happening to the housing market, we have a strong demand kicking in, combination of these three, plus we didn't build very many new homes, so the supply of existing homes has shrunk. We don't have as many foreclosed properties, we don't have as many short sales, and inventory of existing homes is really tight. So we're seeing these double-digit home price increases. Is this going to continue? I think it's going to go through moderation, by the way. I believe by the end of this year, we're going to see single-digit appreciation, even with those exotic measurements. And next year, actually, supply is going to start increasing. Some new homes are going to come to the marketplace.
Well, your Orange County housing permits, which were all of 2,000 and 2009, you say by 2014, almost 10,000.
10,000.
Give me some context when things were really booming here.
Oh, it all depends historical. I mean, if you look at 2006 and 7, that was about 10, 12,000.
Okay.
But some years in 70s and 80s, we were building 40,000. So,
right.
I
So
mean,
more supply. And
supply.
encouraging note, not too much of the current supply. We've kind of worked through the foreclosures, haven't we?
Yeah, most of them are gone. It's still, there's some sitting out there, and some of the banks are waiting to slowly bring it to marketplace. But you're going to get some supply of new home. You would get actually some supply of resale units. Look at those people who were underwater, and now prices are. So, and maybe this is the opportunity for them to, in a decent fashion, to sell the house and maybe even move to another area or cheaper area. So you're going to see some of that kicking in. And plus, mortgage rates are showing a little bit of an uptick. Now,
Yes.
it's not going to kill the housing recovery.
Now we
but-
recorded, I just say, at the end of June,
Yeah.
we're up almost 40 basis points in the last 4 weeks.
Exactly. So when you put all of this together, I don't think we're going to see double-digit price increases for next year, but still we're going to see some increases. Single digit, I think, is about 8%, for Orange County and California next year.
With all the increase, and you'll have to refresh my memory if this is a national or state or a regional figure, at the height in 2006, all homeowners taken together had $320 billion of home equity.
Yes.
Now in 2012, with this recovery, and a lot of it's been in 2013, $29 billion of home equity.
Yeah.
Is
So
that
it's a
na-
national figure. A national figure.
So the nation is just getting out from underwater.
Yeah, and that is explaining partly we were talking about wealth effect, that most people now, not everybody, most people are seeing the values are getting closer to those peak values, and even those people who were underwater, they're realizing a little bit of equity, and all of that is good for the economy, by the way.
Sure, that's hopefully where some of that demand will then come from.
Except actually, I kind of off camera, I mentioned it to you, one of our consumer confidence survey, when we send it out, somebody wrote on the postcard, when am I going to be able to buy a home? So for people who are renters, potential buyers, this is not a good news, but for the economy as a whole, firming home prices is positive for job creation and also spending.
Of course, when you get those adjectives that we talked about, insane, and when you get these 30% increases, whether we are not taking into account the mix, it gets a lot of concern about another bubble, and we will take that up at the start of our next Chapman Business Report. So we'll end this one with the good news on housing. We'll also talk a number of interesting things going on, this bidding war coming for the LA Times and its affiliate papers, and why Hollywood keeps losing more and more of the production business, even at high-cost places like London. That's on our next Chapman Business Report. Boss, as always, thank you very much.
My pleasure.
We caught some shade and some breeze. Jeff Cole, class of 2001, his production team, they put the Chapman Business Report on the air. A great thanks to them, and thank you very much for watching.